You were listening to chartingwealth.com for Tuesday, the 7th of November, 2017. We see everything up for the day on Monday. The S&P 500 up 0.14%. The Qs, that's the NASDAQ 100, up 0.34%. We see the 20-year bonds up 0.37%, and the most gold up 0.85%, almost a full percent. Now let's go first to the S&P 500 as we always do. Remember, we had a weekly vertical crossover take place on the week ending the 29th of September, and we have seen since the S&P turned over going up, we have green candles going all the way back to the 1st of September. And of course, like we said, we had our chart rotate over on the 29th of September, and we have seen 4, 5, 6, 7, 8, 9, 10, 11. We're going into the 11th week of strong up movement after that pullback that started on the week ending the 11th of August and went through the end of August on the 25th. And then, of course, the following week started this uptrend that has just been jamming up, up, up. We see the derivative oscillator so far this week backing off a little bit. We've seen things slow down over the last few weeks as opposed to that exuberance, particularly during the weeks ending the 6th of October and the 20th of October. Things started to slow down there toward the end of October and on into November, but again, still moving up. But we had several weeks, actually 4 weeks, of grand up movement above the Bollinger Band significantly. So again, we'll continue to see how this plays out. Of course, don't forget, as we told you, the summer doldrums ended on the 1st of October, and we entered the fall-winter trading zone, which those of you who have the ability to set your schedule, best time of year to trade, fall-winter. That's where you see the best movement in the stock market. Volume comes back into the market and typically affects things for the positive when it comes to being able to track what's going on in the market. Let's see what's going on the 2-day chart. We see that it continues to move up. Derivative oscillators actually up this first day of the latest 2-day candle. It had gone down to a bottom but actually popped up a little bit. We'll continue to keep an eye on that. That latest candle will finish drawing on Tuesday. And then if we go into the 4-hour chart, what do we see? Well, of course, we had sort of a sideways slide there on the 4-hour chart from around the afternoon of the 27th until, sometime on, the morning of the 3rd of November. And then we've had 4 candles of nice, strong up movement since then, with the derivative oscillator moving up and the price percent oscillator. Of course, we had that rotation over going up in the morning on the 11th. And of course, if you jumped in there in the afternoon somewhere around the opening of 157.53 or the next morning, then of course you've seen some nice, some very nice price movement over the last few days of a good $1 or more. Now let's look at, we'll just keep moving through these charts. And again, those weekly vertical crossovers are beautiful, aren't they, my friends? When they work beautifully. Why? Because they're based on trend following, not forecasting. Looking at where an established trend has enough energy. And remember, the trend started back on the 1st, but it didn't really become a trend until it had enough energy to rotate our price percent oscillator over. And we had what's called a weekly vertical crossover, which time after time after time, they work. They work. Now, could you have gotten in back on the 1st of September? Well, yeah, maybe you could have. But was that going to work for you? Well, you could have jumped in back on the 14th of July, or you could have jumped on back even before that. But the problem that we run into over and over again is, again, when everything sets up perfect for us, we don't have the pullbacks. We actually have the nice up movement. And again, we're willing to see things start to move up and then start to fake us out, pull out, and wait for the perfect setup. And of course, we saw that occur right around the 29th of September. And it has been beautiful since then. So again, weekly vertical crossover, we established that for a reason because it tends to work time and time again. When it doesn't, then we pull ourselves out of the market and wait for the appropriate time to get in. Again, it is that big wave. All things being equal, the market tends to move in the direction of the largest chart. And that's our weekly chart. Of course, our once a quarter, we do check the quarterly chart. And for those of you who subscribe to our daily market review, we tell you when that's coming and offer you the opportunity to do that training with us. Okay, let's now move on to the Qs, the NASDAQ 100. What do we see going on there? We had a weekly vertical crossover recently, back on the 27th of October. And of course, we've seen beautiful appreciation since then. We saw the market open the following week somewhere around 148. I think our jumping in point was 149 something. And of course, up to 153.47. So again, beautiful up movement, continuing to move up on the weekly. What do we see on the 2-day? Again, continued up movement and appreciation. We will redraw this trend line once the current candle actually closes, and we'll probably move that movement down, not quite as high. But regardless, price movement is above our 2-day trend line and well above our weekly. And what do we see when we look at that 4-hour chart? Again, strong up movement the last 2 days. Continue to keep your eye on that 4-hour chart. We don't like the fact that the derivative oscillator lost so much energy, but it does appear to be gaining that energy back. So things are looking beautiful on that chart also after that weekly vertical crossover going up recently. What's going on TLT, the 20-year bond fund? Of course, we had a weekly vertical crossover going down for a short position. That occurred back on the 29th. It went down the following week, the 29th of September is when the weekly vertical crossover going down occurred. Had strong movement down the following week ending the 6th of October. Slid sideways for a couple of weeks and then a strong down movement through the 27th. So again, strong depreciation for a short position. And then what's happened over the last few weeks? Well, the last week, it did have some up movement, more of a spinning top showing indecision, but tending up. And over the course of the first day of this latest 5-day or weekly candle, we have seen strong up movement. As we hone into that a little more, we can see on the 2-day chart a strong trend line on the 2-day chart with that 2-day vertical crossover there on the Friday the 3rd of November. And of course, as we look even closer, we gave you the caution. This is the beautiful thing about using all the charts all the time. We saw that strong position occurring when we had the 4-hour crossover in the afternoon after that morning up movement. We saw that back on the 30th of October. So we saw all of this coming, and of course, encourage you to pull any short positions at that time. And we've since moved the 2-day trend line, but we had violated that 2-day trend line when that was occurring. Now that we've had that 2-day crossover, of course, the trend line's going up on the 2-day. So again, keep your eye on the prize. When you have a strong pullback on that 4-hour chart, take your profits that you made on that down move and pull out. Wait for us to get a new change in direction, a new certification of a weekly vertical crossover before you start taking any risk on the new up movement. Again, we've got to be patient. Remember, hogs get slaughtered. First rule, don't lose money. Second rule, make money. Now, let's go lastly to gold, up the strongest for the day. Remember, gold went into a weekly vertical crossover going down back on the 6th. And of course, that's the 6th of October. It moved down, then sideways, then down over the last 2 weeks. And the first day of this latest week, we have a green spinning top. Typically portends instability and indecision. But when you have a green spinning top, typically means on the upside. Derivative oscillator's law is losing downward momentum. And we can see the price percent oscillator is not moving down at the same strong angle it had been. That's been tempered. As we look a little closer on the 2-day chart, we can see that it definitely is bounding up. Again, we talked about where the market was sort of hitting a bottom around 120 something. That's exactly what it is doing. We trace that back further in time. Again, that's the nice thing about having these charts, is to go back in time and start seeing where the market either topped or bottomed in the past. that can give you some idea as to where things might be bottoming out again. So again, keep your eye on the prize there. And this 2-day chart may be getting very close to crossing over, going up. Hasn't happened yet, but does appear to be getting close. It could bound back down again. And if it does, be ready to jump in. Of course, what's happening on our prescient 4-hour chart? We talked about this last week. We saw it cross over going up back on the morning of the 1st of November. Went up and then sort of tracked back down and is moving back up again. So keep your eye on things. Price movement is above the 2-day trend line, not above the weekly yet, and does appear to be bounding off, getting very close to bounding off the red signal line back on the afternoon of the 3rd, Friday the 3rd. So just keep your eye on things. Remember, all things being equal, market does tend to move in the direction of the largest chart, and that is the weekly. But this 4-hour chart in gold typically is a total trading chart. Again, it's nice when you have everything moving in the direction of your 2-day and your weekly. Gold is a little different. This 4-hour chart seems to just be the beautiful chart for where gold is actually going time and time again. We can track it back in time. Except when the market really slides sideways, does it get off kilter. But boy, once the market starts really moving, the 4-hour, which is most of the time in gold, the 4-hour chart is just beautiful time and time again. So keep your eye on the prize. Watch that. Folks, thank you so much for being with us. You have questions, problems, concerns. We hope that you are doing well. If you want the most of what we do, fill out those daily market worksheets. Every day the market is open. Once a week, that weekly market worksheet. Every time you do a practice trade, you do it with our trade worksheet. We are all about education. We're not a stock calling service. We're an education firm, and we want to educate you on how to read these charts, because being able to read these charts lets you become a market master. That's what we're all about here at chartingwealth.com. If you haven't already subscribed to our daily market review, what are you waiting for? It's absolutely free, and it is your key to the kingdom. What we want you to do, go to our website, chartingwealth.com, sign up. Every day the market is open, we will send you our daily market review along with all the links to the How to Read a Stock Chart video, the daily market worksheet, weekly market worksheet, trade worksheet, and the layout that we use at freestockcharts.com. All of it priceless. Doesn't cost you a dime, but we do ask you to spend 10 minutes a day filling out those worksheets and the trade worksheet every time you do a trade. Great training at the website telling you exactly how to use each of those worksheets. Check it out. It is the most valuable time you will spend if you care about riches and wealth in the future. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.